We're getting more and more good days than bad days in this equity market. So is this a sign of a bottom that's starting to really form now?
I think so. I mean, if you look at gradually the, sort of Chinese government in Shanghai and Beijing, they gradually, particularly Shanghai, but gradually opening up. We see the manufacturing activities resumed already. Obviously, it takes time for consumption to come back, but we do see more positive signals coming to be more constructive. And plus, valuations is still dirt cheap. I mean, I have to say, we are very close to the trough that we see in the last 5 years. I think that's very important.
And do you kind of pick up the reopening trade? Is that still the way to kind of go in these markets right now? If we expect some sort of further easing of curbs in China?
Well, I think initially, yes, you will find the reopening trade more responsive to these type of signals. As I said, maybe eventually people come out to, sort of dining, entertainment, and hopefully domestic travel. But for broader consumptions, it will take time because it might volatile. People very not convinced because remember we have this sort of weak signals, 2 or 3 weeks down the road, and then it didn't happen. It didn't really open up, and then people got frustrated. I think this time around, people need more stronger signals to be sort of believing that we finally reopen.
What would that signal be? What would convince you?
We actually have tracked it on a daily basis. We track the truck index, so that manufacturing activity, box office, people consumptions, car sales. These are all luckily daily data that we can actually track very closely. So we do not, I think nowadays people do not just believe in what government said. We really need to see actions coming through.
I always bring back your previous experience in property. We've seen some policy signals. The LPR cut certainly was a clear signal that they were wanting to bring down mortgage rates. Have you seen enough of policy to support the property market now?
We did see enough in terms of sort of government support, but obviously we need more. I mean, national change of policy, it's better than just local government saying this and that. And also on top of that, why all these, sort of measure not moving the market? It's people have been, sort of mobility restrictions are still there. They're still at home. How can they be really feeling that the fact, oh, I want to buy a home or a second home? They're still bounded by within their residence. They cannot do anything. So that's why the sales did not respond to a lot of these measures coming through.
What does that mean for credit? Because credit's also very cheap, especially property, right? As Yvonne was pointing out. And is that one opportunity that is right there for the taking if you want it? Because there is policy support behind it.
If you look at the change itself, the rate cuts itself, it's very marginal, right? But it's a signal that's sent by the governments that's very important to the local. But there is also another thing that affecting the market. We know that unemployment rate is pretty high, right? The overall field of the economy, it's rather weak. So sentiment-wise, it's not as strong as a few years back when they do this sort of monetary easing. So I think that is something we need to understand why we are not able to see a sharp rebound even after all these policy.
Okay, top 2 sectors you like and top 2 sectors you'd like to avoid equity-wise.
Reopening will continue to be the sector that we like. Constructions, material, some of the things that relating to infrastructure, because we know that Chinese government is going to boost infrastructure for sure. Some of the sectors that I still be skeptical, I think it's still property. We need to pick and choose the ones that are able to consolidate market share. Yes, we like, but there are still a few of those that cannot survive.